Let's talk closing costs. The one cost that most people expect is the down payment amount, and this amount will vary depending on your loan product and your scenario. It can be as low as 3% for a first-time home buyer and up to 20% or more for conventional loan in order to avoid paying mortgage insurance. Prepaids. What are these? Simply put, these are costs that are paid before you get to the closing table. This includes the appraisal fee, which is somewhere between $460 and $550. We need to figure out if the property is valued at the amount of money you'd like us to lend you. Next, your homeowner's insurance premium. It must be paid in advance so we know that the home we are funding is actually insured. Prepaid property taxes. In my state, property tax is paid in arrears, which means the homeowner pays for the billing period leading up to the due date. A homeowner who sells the home, however, is responsible only for the portion of the tax for the period she owned the home, and then the buyer pays the rest. As for the rest of the closing costs, they're paid at the time of closing, and these are lumped together with the down payment amount to make the total needed cash to close. There's a processing and underwriting fee because we need to be able to pay our amazing processors and underwriters for preparing your loan to get it to closing. There's a fee for your credit report, super important in establishing your creditworthiness. Now for the lawyer stuff. In some states, these items are handled by your title company. In my state, attorneys handle the title examination, title abstract, the title binder, and their own settlement fees. You may not understand why a title exam is truly necessary, but believe me, you want to be sure that when you close on your home, someone's Aunt Susie can't show up with a claim to your property. In the same vein, there's a fee for lender's title insurance and a fee for owner's title insurance. Lender's title insurance is required, but owner's title insurance is optional. An owner's policy can protect you against losing your equity and your right to live in the home in case the aforementioned Aunt Susie does show up after you close on the home. And finally, escrows. If you are escrowing taxes and insurance, we collect a cushion of 3 months reserves at closing. If the escrowed amount has a little extra at the end of the year, you'll get it back. All of these closing costs will be laid out for you in the very beginning of the mortgage process in your loan estimate. And at least 3 days prior to your closing, you'll receive your closing disclosure, which gives you the final numbers and your cash to close amount. It's crucial to be familiar with all of these closing costs so that you really know how much money you need so that you can purchase your home. Most people just calculate that down payment and then they freak out about all the extra costs that show up. Hopefully, this helps you prepare for one of the most intense adulting experiences of your life, buying a home. Do you need a mortgage? I'd love to help. Call me today.